Good day Forex trader. Your USD Forex Signal, Euro plunges on Ukraine war. The euro is the weakest of all major currencies. Today's Euro USD signals. Risk 0.75%. Trades must be entered between 8 a.m. and 5 p.m. London time today. Short trade idea. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.0888. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.0838 or $1.0710. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote in my previous forecast on February 28 that although the gap to $1.1202 may be filled, this pair was vulnerable to downside movement due to the geopolitical situation being likely to strengthen the dollar and weaken the euro. I was very comfortable targeting at least $1.1100. This was a good call insofar as I was on the right track, and the pair has continued to fall strongly. The market today is unusually clear and simple: the ongoing Russian invasion and occupation of Ukraine, and the small but real threat of a wider war in Europe, not to mention the economic impact upon Europe of scarcer and more expensive energy, are strongly weakening the euro against almost all other major currencies. The US dollar is not the strongest, but it is relatively strong, so the price continues to exceed 18-month lows, trading as low as $1.0821 during the Tokyo session. This is a market situation where technical factors will be relatively unimportant, with sentiment and economic fundamentals dominating. However, the price is currently pausing after retracing to $1.0888, which was supportive and now seems likely to have flipped to become new lower resistance. If the price remains below this level, it will be likely to fall hard later today, giving another good short trade opportunity. If the price gets established above that level, we will likely get a deeper bullish retrace before the downwards movement resumes. Gbp Usd Forex Signal, more weakness as more hawkish Fed expected. There is a likelihood that the pair will continue falling this week. Bearish view. Sell the Gbp USD pair and set a take profit at 1.3150. Add a stop loss at 1.3280. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3275 and a take profit at 1.3350. Add a stop loss at 1.3200. The Gbp USD pair has been in a strong bearish trend in the past few days as investors focus on the rising risks and the likelihood that the Federal Reserve will embrace a more hawkish tone. The pair is trading at 1.3237, which is the lowest it has been since December last year. US jobs data. The Gbp USD pair declined as investors rushed to the safety of the US dollar as the ongoing crisis in Ukraine continued. In the past few days, fighting has continued in key Ukrainian cities and villages, leading to worries of an escalating war. The UK and the US have announced significant sanctions, which are meant to punish Russians and make Putin pay for his attack. Still, there are risks that the sanctions and the rising tensions will affect the UK economy because of the rising prices of crude oil and natural gas. On Friday, the US published strong jobs data. According to the Bureau of Labor Statistics, the economy added more than 600,000 jobs in February as the economic recovery continued. This increase was better than what analysts were expecting. It was also better than the estimate by ADP and the previous reading. Other numbers showed that the labor market is doing well. For example, the unemployment rate dropped to 3.8%, which was the lowest level since the pandemic started. The labor participation rate also did well. The only concern was that wages have started to drop as wage growth slowed from 5.5% to 5.1%. Still, these numbers reinforce what the Federal Reserve said last week. In his testimony in Congress, Jerome Powell said that the bank will start tightening in the next meeting. Therefore, with inflation still rising, there is a likelihood that the bank will deliver a 50 basis point hike. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has been in a strong bearish trend in the past few days. It has fallen by more than 3.75% from its highest level this year. The decline continued after the pair moved below the key support level at 1.3275, which was the lowest level this year. It has also moved below the 25-day and 50-day moving averages while the RSI is approaching the oversold level. Therefore, there is a likelihood that the pair will continue falling this week. If this happens, the next key level to watch will be at 1.3150. Aud USD Forex Signal, more upside as commodity prices jump. The Aud USD pair will remain in a bullish trend as long as it is above the two moving averages. Bullish view. Buy the Aud USD pair and set a take profit at 0.7500. Add a stop loss at 0.7300. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7350 and a take profit at 0.7300. Add a stop loss at 0.7400. The Aud USD pair has defied gravity in the past few days as global commodities rise. The pair is trading at 0.7375, which is the highest point it has been since November 2021. It has jumped by over 5.9% from the lowest level this year. Commodity prices jump. Australia is one of the most endowed countries in the world. It has vast coal, natural gas, iron ore, gold, and aluminum. Therefore, the country does well when the commodities market is flourishing. This is why Australia is often seen as a barometer of commodities. In the past few weeks, the prices of most commodities has jumped sharply as the crisis in Ukraine continues. For example, the price of natural gas has risen to a record high because Russia is the biggest supplier in Europe. Iron ore, copper, coal, and gold have also surged. As a result, the closely watched Bloomberg Commodity Index has jumped to the highest level in over a decade. Still, like all countries, Australia will suffer quite a bit as prices increase. For one, the country is a leading importer of crude oil, meaning that its positives in other commodities will be offset by oil. At the same time, since the country has an open economy, it means that it will see higher inflation. In its meeting last week, the RBA estimated that inflation will remain above 3% for a while. The Aud USD pair also rose even after the strong jobs numbers from the United States. Data showed that the economy added more than 600,000 jobs in February while the unemployment rate has fallen to 3.8%, which was the lowest level since the pandemic started. Therefore, judging by Jerome Powell's statement, there is a likelihood that the Fed will be more hawkish than the RBA. Aud USD Forecast. The daily chart shows that the Aud USD pair has been in a strong bullish trend in the past few months. The pair's bullish trend accelerated last weekend when it moved above the key resistance at 0.7313, which was the highest level on January 13. The pair has also moved above the 25-day and 50-day moving averages while the RSI has risen above the overbought level. Therefore, the Aud USD pair will remain in a bullish trend as long as it is above the two moving averages. The next key resistance to watch will be at 0.7500.